copper prices on the London Metal Exchange have continued to fall, extending a downward trend that has analysts like ING closely watching. The red metal, often seen as a leading indicator of global economic health, is under pressure from a mix of macroeconomic headwinds. Analysts Warren Patterson and Ewa Manthe at ING have pointed to a convergence of factors that are weighing on copper demand and sentiment. Among these, rising inflation concerns linked to the ongoing Iran conflict have played a key role. Tensions in the Middle East have raised fears of supply disruptions and higher energy costs, which could ripple through global markets and slow economic activity. At the same time, China, the world's largest consumer of copper, has reported weaker than expected economic data. Manufacturing output and property investment figures have come in below forecasts, casting doubt on the pace of the country's industrial recovery. These developments have added to the pressure on copper prices. Meanwhile, the US dollar has strengthened, partly due to safe haven demand amid global uncertainty. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Stronger dollar makes copper more expensive for buyers using other currencies, which can curb demand and further weigh on prices. ING's analysis highlights that these three factors, geopolitical tensions, weak Chinese data, and dollar strength, are creating a challenging environment for copper. While the long-term outlook for copper remains positive, with structural demand from green energy and electrification projects, the short-term dynamics suggest continued volatility. The immediate price action reflects these near-term concerns more than the long-term fundamentals. Copper's role as an industrial bellwether means its price movements can signal broader economic shifts. When copper falls, it often indicates slowing industrial activity or weaker demand from key markets like China. This makes the current decline particularly noteworthy. Investors and traders are watching closely to see whether this trend will persist or if any of the headwinds will ease. The Iran conflict remains a wildcard, with potential for further escalation that could disrupt energy markets and fuel inflation. If the situation deteriorates, copper could face even more downward pressure. On the other hand, if the conflict stabilizes or de-escalates, some of the inflationary fears could recede, potentially easing pressure on copper. The Chinese data also remains a key watchpoint. If the country's economic recovery gains traction, copper could see a rebound in demand. However, if the weak data continues, it could reinforce bearish sentiment in the market. The US dollar's strength is another variable. If the dollar continues to rise, copper will remain expensive for non-dollar buyers, which could limit demand and cap price recovery. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. But if the dollar weakens, copper could become more attractive to global investors, potentially supporting a rebound. The next key signal will likely come from either a shift in the geopolitical landscape or a clearer sign of economic recovery in China. Until then, the copper market will likely remain sensitive to macroeconomic developments and currency movements. For now, the confluence of factors is keeping copper prices under pressure, and the market is waiting for a clearer signal of which way the trend will go next.